Fresh, never frozen beef might be a great marketing slogan, but wow, it is absolutely toxic for margins right now. Welcome to Earnings Unscripted. It is May 8th, 2026, and we are digging into the Q1 results for Wendy's, ticker WEN. And Miro, looking at this print, operating income plunged almost 22%. Traffic is way down, yet the stock popped today?
Right. The headline numbers are frankly ugly. Earnings came in at 12 cents a share, which is a drop of nearly 37% year over year. And just a quick reminder before we really unpack this is strictly our personal opinion and not financial advice. So please do your own homework. But yeah, the stock reaction is the actual story here.
Because the setup coming into today was just so bleak.
Exactly. The stock trended, well, it basically bled out over 18% through the entire prior quarter. It finished near its absolute low, around 680. People were clearly pricing in a total catastrophe. So when total revenues actually managed a 3.3% bump to $540 million, the market just exhaled. We saw a sharp pre-market gap up to over 730, and it pretty much held there. It finished extended hours up over 5% compared to yesterday.
Okay, so a massive relief rally. Because if you look under the hood at the core business, U.S. same-restaurant sales fell almost 8%, which is...
It is a massive traffic bleed, and compounding that volume drop, you have this brutal double-digit beef inflation. That dragged U.S. company margins down to 11.4%.
Which is down from nearly 15% last year, right?
Yeah, a painful 340 basis point drop. It turns out that their entire fresh, never frozen identity is a highly expensive promise when commodity costs spike 8% in a single quarter.
They are just getting squeezed on both ends. But I did love this one very human detail from the call. To fix drive-thru friction, they finally rolled out literal label printers to 85% of their stores.
Oh, right. The sandwich stickers.
Yes, because families were having to unwrap every single sandwich to guess which one had no pickles or whatever. They just started printing the names on the wrappers, and order accuracy shot up by a massive 170 basis points.
It is amazing how a basic printer can fix a logistics bottleneck. But look, stickers are not going to save the unit economics here. To do that, they actually shrank their total footprint. They closed a net 146 locations this quarter alone.
All right, let's get right into the details on that.
Yeah, so the instinct is usually to panic when a chain like Wendy's shuts down 146 stores in just 3 months. I mean, they dropped from roughly 7,400 locations down to 7,251. But this isn't random. It's actually triage.
Right, because under this whole Project Fresh banner, they are trying to, save the franchisees from themselves, basically?
Or just save them from the brutal macro environment. Susie Thurk, the chief accounting officer, pointed out that last year, average U.S. franchisee EBITDA margins fell 270 basis points. They are sitting at 9.3% now.
Wow. Okay, so 9% margin in the restaurant business with rising labor and food costs. You are basically one broken freezer away from losing money for the entire month.
Exactly. So corporate is forcing a cleanse. Management plans to cut maybe 5 to 6% of the entire U.S. system to just remove the dead weight and let the healthy operators survive.
And I think what makes this so wild is the split reality here. You have them aggressively shrinking in their home market. I mean, pruning the U.S. fleet to survive. But at the exact same time, they are placing this massive bet abroad.
The China deal.
Yes, 1,000 restaurants in China over the next 10 years, which is it is a staggering pivot.
Well, I should probably just give the actual quote from CEO Ken Cook here. He was pretty explicit early on the call. He said, and I'm quoting, "We're excited to announce today that we recently signed a new franchise agreement to build up to 1,000 restaurants across China over the next 10 years." Unquote. He literally called it the largest development agreement in company history.
So wait, are they essentially giving up on U.S. unit growth? Because it really sounds like they think America is fully saturated for them.
I think it is probably more like an acknowledgement of reality. The domestic return on investment is just broken for the time being. You mentioned the lower income consumer earlier. They are vanishing. U.S. traffic is terrible. Breakfast, which was supposed to be this huge growth lever, is a complete drag.
Oh, man. Yeah, the breakfast piece. Did Cook actually say it negatively impacted U.S. same-restaurant sales by over 100 basis points?
He did. Over 100 basis points of drag. So you have a struggling morning day part, crushed margins, and hyper price-sensitive customers.
Okay, yes. But to combat that, they are completely changing how they talk to those exact customers. Did you catch that they fired their ad agency?
After 18 years, yeah.
Right. 18 years with the exact same agency, and they just ripped off the Band-Aid. They want to move away from constant price promotions to an audience-based approach, basically pitching Wendy's as the everyday upgrade.
Which is, a fascinating marketing spin for a company actively leaning on their $4, $6, and $8 biggie deals to survive. It's a bit of cognitive dissonance there.
A tiny bit. It's like saying, we're the premium option, but please buy our $4 combo so we can keep the lights on.
Pretty much. But mathematically, it shows you that they're pulling every single lever at once. Marketing, footprint, international expansion, menu pricing. They're just running the machine entirely differently now.
So if the whole business is basically under active reconstruction, how do we even think about where this puts them heading into next quarter?
Well, look, the short answer is that the bleeding is not over yet. They are basically telling everyone to brace for a mid-single-digit decline in system-wide sales for the second quarter.
So it gets worse before it gets better, which makes that stock rally today look, even more like pure relief that the ship is not fully sinking.
Exactly. They are leaning entirely on this back half recovery narrative. Management is reaffirming their full-year guidance, but they are doing a lot of hoping. Cook actually said on the call that they expect performance to continuously improve, but then he tacked on this huge caveat. Quote, recognizing that the exact timing is difficult to predict.
Oof. Difficult to predict. That is the ultimate CEO safety net. It basically translates to, trust us, the plan is working, just please do not ask for a date.
Right. And the thing you really have to watch here, the actual structural risk, is the cash flow. Net cash from operations was, $59 million this quarter. CapEx takes about 12 of that. Once you add in the dividend payout, there is almost zero buffer left. If this turnaround gets delayed into late 2026, that dividend starts looking very fragile.
So if you're an investor, you're essentially hanging your hopes on Project Fresh working perfectly and some magical bounce back in the fall. Oh, and I saw they get a 53rd operating week in Q4 this year, which definitely helps juice the final numbers a little bit.
It does. A 53rd week is a fantastic place to hide a slow recovery. But fundamentally, they have to prove they can win back that lower income consumer. You can close underperforming stores, you can print names on sandwich wrappers, but eventually people have to actually want to buy the food.
That is a perfect summary right there. It is a pure show me story now, just without the shiny 18-year ad agency.
And hopefully with slightly cheaper beef.
We can certainly hope. All right, I think we have roasted this burger enough for today. Let us wrap it up.
Sounds good. See you all next time.
If you want these earnings breakdowns to just organically show up in your feed, go ahead and follow the show. As always, this podcast is generated with the help of AI, which is exactly how we can compress those dense 50-page financial filings into a quick coffee chat. If you have a ticker you want us to dig into next, just drop us a note at earningsunscripted@datamadness.ca. Thanks for hanging out with us today, and we will catch you after the next bell.
Take care, everyone.